What's going on, guys? Welcome back to another video. So in this one, we're going to be going over the pretty important catalyst that we have going into tomorrow, the midterm elections, the likely outcomes that we are most likely going to see, and how the stock market is going to react to each one of those outcomes in order to best prepare ourselves for all of the crazy movements that we are most likely going to see going into the end of this week. Now, we have two really important days this week. One of them's tomorrow with the midterms, and then Thursday, we're going to be getting the CPI data. Now, if you remember what happened last time when the CPI report came out, we breached new lows, and we went on one of the most aggressive rallies that we have seen in a very long time in the overall market. So there is a lot of volatility ahead. So let's get prepared and make sure that we know everything that we possibly can with the information that we have to make the most money that we can going into this trading week. So guys, before we get into all of that information here, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts over here. And looking at the SPY on the 4-hour time frame, we're teetering right around that 380 level. Now, that's kind of been neutral or middle ground so far over the last couple of weeks for the bears and the bulls. Now, if we end up seeing a very positive reaction off the midterms and maybe even CPI going later into this week, well, the move up that we would have wouldn't really put us into any real aggressive squeeze territory to the upside. And the move down that we could see from these levels is most likely not going to take us to new lows. Now, when we're looking at how the market performed today, it was incredibly choppy. So if you ended up making money today, congratulations. If you're able to kind of wait out this chop, play this nasty cross up going into the end of the day here, awesome. But again, there is a lot of money to be made. And again, I do want to highlight some of our members over here that are absolutely crushing it day in and day out with the only proprietary trading algorithms available to retail investors out on the market, the alerts, the live streams, the curriculum videos, the options data. If you guys do want to come and check out the best place to learn how to trade, make sure you check out that link down below. But we did see a couple of interesting things happen with the dollar today as well. We did see a weakening dollar. So it was selling off pretty significantly here. And when we do look at the 10-year, it was rising today. So you did see some bond sales coming through overall. Now, when we go back and take a look at SPY on this daily time frame here too, just to give us a little bit of a bigger picture, we are crossing up above this moving average here with the RSI. The MACD is losing a little bit of momentum here as well. So you can see that we're in a little bit of no man's land right now, and the market is really bracing for what is to come later this week. Now, the first thing that we need to take a look at here is Wall Street agrees a red wave in the midterms will push stocks higher. Now, whether or not that is true, we are going to see a couple of different scenarios, the likeliest scenarios, play out. Which one is that going to be? Nobody knows, and at the end of the day, I personally don't really care. We're going to see markets move. We're going to see the basically political landscape change slightly, and we're going to have a little bit more insight and guidance going forward. But at the end of the day, you really have to focus on what you can control in your portfolios every single day. So let's take a look at what some of the likely outcomes are. Well, technically, any outcome tomorrow will be beneficial for stocks, but a red wave should be especially bullish. According to Deutsche Bank economists, their base case is that Republicans will take the House, but Democrats will maintain their slim majority in the Senate, although they admit the latter is a close call. And indeed, according to Predict, the odds of a red tide, quote, full sweep, have now risen to 71%, more than double from their early September lows. That said, it is highly unlikely that either party will achieve a 2/3 majority in Congress, thus effectively maintaining President Biden's veto power and continuation of the mostly lame duck Congress, courtesy of Joe Manchin, with a few notable exceptions. While Deutsche Bank tries its best to remain impartial, Morgan Stanley has no such qualms. And in his lately weekly warm-up note available to professional subs over here, Chief U.S. Equity strategist Michael Wilson, who is becoming less bearish by the day, writes that investors should remain bullish on equities ahead of this week's U.S. midterm elections because polls pointing to Republicans winning at least one chamber of Congress provide a potential catalyst for lower bond yields and higher equity prices, which would be enough to keep the bear market rally going. Now, when we come down a little bit here, there's really three scenarios that we have to take a look out for here. And this really has to do with what's going on in the overall market. Concerned about near-term market volatility, higher volatility will more likely results from a better than expected night for Democrats than for Republicans. Outcomes that meet expectations typically do not move markets a lot. And this is very similar to what we see when any piece of economic data comes out. It all has to do with what the actual economic expectations are and what the consensus is. If the consensus is X and the numbers come out at X plus 1, then we're most likely going to see the market rally. It doesn't necessarily matter if that expectation is actually terrible or not. It's what the overall market expects. If the market is pricing in X and it comes out as X minus 1, then you're most likely going to see the market react negatively. And judging from the recent levels and trends in both polls and prediction markets, Republicans are expected to win a majority in at least one chamber of Congress. Against that backdrop, it is important to note that we do not see a Republican win as leading to policies that on their own would be important market catalysts in any direction. Okay, now let's take a look at this second statement right here. A Republican win may not create near-term market volatility, but does introduce situational risks for 2023. Benign neglect is often the outcome for a split government in the U.S., but not always. Following the 2010 midterm elections, gridlock led to protracted debt limit standoffs and government shutdowns. The resolution to one such standoff was the Budget Control Act of 2011, which implemented contractionary fiscal policy while the economy was still weak. Indeed, when the legislation was passed in August of that year, the unemployment rate stood at 9%. The result was weaker growth and a slower economic recovery, which partially explains why the liftoff of the Fed funds rate was delayed until 2015 and unfolded gradually thereafter. At present, Republican leadership is signaling its intent to deploy the same tactics if the party wins majorities. While markets could easily dismiss these negotiations as political theater, as they have in recent years, amid solid economic conditions, if the economic outlook sours in 2023 in unexpected ways, the specter of the Budget Control Act could weigh on markets. So this is an implication that some people may not be thinking about. If Republicans win enough seats, you could end up going into some of this gridlock here, and you could see a little bit more volatility. Beware premature conclusions on election night. As in 2020, the increased use of vote by mail means the early reported vote tallies may not be a good indicator of who is winning, especially in races expected to be close. What we saw in 2020 and in other elections is that mail-in ballots were cast more often by Democrat than Republicans, and in many jurisdictions were counted after in-person voting. That means early reported results should look favorable to Republicans, but as in 2020, leads could vanish over time. Consider the Pennsylvania Senate race. Assuming mail-in ballots are cast in the same proportions with the same party skew as they were in 2020, we estimate that the Republican candidate could win the in-person vote by 29% and still lose after all ballots are counted. So essentially what they're saying here is very similar to what was said at the White House press conference today. The actual results of this election are probably not going to be decided tomorrow night. So this volatility that we could see could lead into the next couple of days. Now, what does this actually mean for markets? Uncertainty. Now, typically when we see uncertainty in markets, it leads to more volatility. So if we end up seeing this scenario here, which is pretty likely with everything that's been happening and with what we've seen since the last election going into this one and the statements that have been made, be very, very careful holding some of these positions overnight, as a lot of the sentiment in the overall market here, based on who is then going to get put into power in certain positions, could easily change very, very, very quickly. So guys, that is essentially going to wrap it up for this video here. If you did enjoy some of the information and analysis that we provided for you guys, make sure you guys drop a like button down below. But really, in conclusion, you really want to be making sure that when you're going into, especially tomorrow, you want to be pretty careful with where you're putting your money. You're most likely going to see a lot of chop again until we really figure out, okay, how has this election actually been finalized? Then we have CPI going in on Thursday here. And if we really look at what we have in terms of economic data going into the end of this week, there really isn't all that much until we get to Thursday. which we're going to get another CPI report, which should be very interesting. Going off of that, again, we should be looking towards these probabilities here. Right now, there is a 52% probability of a 50 basis point rate hike in December and a 48% probability of a 75 basis point hike in December. These are most likely going to change, and something to look out for on where the markets could head based on what the overall market is predicting for where the federal funds rate could go by the end of the year. So again, that's going to wrap it up for this one. I will see you guys in the next video and in all of the live streams. Peace.